statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Kirloskar, Chairman and Managing Director of Kirloskar Brothers Limited. Thank you, and over to you, Mr. Kirloskar. Kirloskar, sir, if you can go ahead. Ladies and gentlemen, please stay connected. Ladies and gentlemen, thank you for your patience. Sir, you may go ahead with the opening remarks. Sir, you may start.
Yeah, okay. Good afternoon, everyone. On behalf of Kirloskar Brothers Limited, I extend a very warm welcome to all who are joining us on this call today. I hope you've had an opportunity to go through our financial results and investor presentation, which has been uploaded on the stock exchanges and on the company's website. On this call with me, I have Mr. Alok Kirloskar, Managing Director, Kirloskar Brothers International BV, Mr. Rama Kirloskar, Joint Managing Director, KBL and MD, Kirloskar Ebara Pumps Limited, Mr. Chittaranjan Mate, Senior Vice President Finance, Mr. Ravish Mittal, our new CFO, Mr. Devang Trivedi, our Company Secretary, and Strategic Growth Advisors, our Investor Relations Advisors. Before I start my comments, I'd like to brief you about a few developments at Kirloskar Brothers. To start with, I'm pleased to inform you that the Board of Directors has recommended a final dividend for the year of rupees 6 per equity share of face value 2 rupees, which is about 300% of face value. We are also pleased to inform you that based on recommendations of the Nominations and Remuneration Committee and consideration of the Board of Directors of the company, Mr. Ravish Mittal has been appointed as CFO of the company with effect from today. Mr. Mittal is a qualified chartered accountant and has completed executive education from IIM Bangalore. He is a fellow member of the Institute of Directors, India and London. He has work experience of over 28 years in the field of finance, strategic evaluation, risk analysis, treasury and forex management, and investor relations, among other things. He's been working with Kirloskar Brothers Limited since July last year as Vice President Finance. I'd also like to place on record my sincere appreciation for the excellent work done by Mr. Mate in his role as CFO. He's been a strong pillar of our organization and has played an important role in taking KBL to where it has reached today. I would take this opportunity to thank him on behalf of everyone, including the Board of Directors, for his dedication and service to Kirloskar Brothers Limited. He will continue as Senior Management Employee with the company as Senior Vice President Finance. Talking about our Q4 and FY24 performance, let me begin with domestic business. For Q4, we achieved year-on-year growth of 13.3% to 899.7 crores. And a growth of 7.1% for fiscal year 24 to 2720 crores for the full year. This is a result of the sustained demand that we have received for our made-to-order and engineered-to-order products. Additionally, there has been a notable increase in made-to-stock orders, which has contributed to our overall growth trajectory. With a keen focus on our business prospects supported by a robust order book, we are optimistic regarding our future growth prospects. We expect to achieve double-digit revenue growth in FY25 compared to FY24 in our domestic business. As of March 24, the value of our standalone pending orders stands at 1826 crores. We are experiencing a sequential uptick in the marine and defense, building and construction, and industry segments. Our international business has made substantial investments in services, which is a high-margin business and is evident in the numerous framework contracts currently active across all our subsidiaries worldwide. For fiscal year 24, I'm pleased to share that our key subsidiaries, SVP UK and SVP USA, reported growth of 10.2 and 18.1% respectively. We expect international business to show respectable growth in fiscal year 25 compared to fiscal year 24. This is on the back of our sustained efforts to innovate new products and expand in new geographies, along with increase in market share in existing products. Our consolidated pending order board stands at 2,999 crores. With this, let me invite Mr. Ravish Mittal, our CFO, to discuss the financial performance highlights.
Thank you, CMD sir, for the warm welcome. Good afternoon, everyone. Let me share the consolidated financial performance highlights with everyone present in the meeting. So our net revenue from operations in Q4 of fiscal year 24 grew by 9%, which is year-on-year to 1,224 crores. And our net revenue from operations for the full fiscal year of 24 grew by 7%. And I'm very happy to announce that we have crossed the 4,000 crore mark. So we've reached to 4,001 crores for the fiscal year 24. On the EBITDA front, our Q4 EBITDA grew by 44% on a year-to-year basis to 228 crores. And our EBITDA margin for Q4 also grew from 14.1% to 18.6%, which is nearly 450 basis points growth. And our EBITDA for the full fiscal year of 24 grew by 36% year-on-year to 578 crores. And the overall EBITDA margin for the full fiscal year of 24 grew from 11.4% of last year to 14.5% this year, which is nearly 310 basis points growth. When it comes to profit after tax, our PAT for the Q4 grew by 52%, which is to 153 crores. And our PAT margin for FY24 fiscal year grew by 48% to 350 crores, which is nearly 350 basis points rise compared to the last year. This is the key highlight results from our side, and we can now begin the question-answer session. Thank you, everyone.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Participants, you may press star and one to ask a question. First question is from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thank you, sir, for opportunity. Sanjay, congratulations for you and your team for such a remarkable performance. The way you were explaining in the past about improvement in profitability, removing low value or maybe lower margin businesses, which is clearly now reflecting the performance. So my congratulations again. Sir, my question is on this. I think your opening remarks give some hint about the growth also, which is we were asking always for revenue growth. So hopefully we'll start at KBL and Karad projects and motors also, because we have grown substantially during Q4. So if you talk a little bit without giving any numbers, qualitatively, what is enhancing this growth numbers at KBL standalone and Karad projects and motors limited? That is my first question.
Uh, Good afternoon, Mr. Kothari. So nice to hear from you. Hope you're doing well. So to answer your first question, from Kirloskar, as we had mentioned earlier, we've made some investments in consolidation of our stores. So we are working on a project there for enhancing operations. And that store essentially came online in end of Q3. Really able to enhance the sales and the turnover from that plant in that last quarter, essentially because of operational efficiency. And that should be, essentially, that would be a sustainable growth, which we should see in the future as well.
Great. So, ma'am, also we talk about some, on the slide number 38, debottlenecking and cost optimization across subsidiaries. So would you comment on this, how this debottlenecking will help us to enhance our capability and capacity? What type of, I don't know, you will not like to give any numbers, but this debottlenecking will be enough for next 2-3 years growth, whatever we are planning. What type of cost optimization yet is possible? If qualitatively you talk more, will be really helpful.
Yeah. If you talk about debottlenecking, we've done over the years we've invested in various types of machinery, and whenever all of you have asked about what is the capex, we say that basically we are going to modernize and we are also going to debottleneck. And what has happened over the years has been that as our engineers have worked on various machines individually, on individual machines, the capabilities and capacities of those machines have grown, but they may not have grown in the right, in a balanced way, in the sense that the first machine, for example, might do 100, the second one might do 120, the third one might do 80. So in that manner, it is amongst a few machines. Then we would like to see what is the highest capability of the machine in that line, and then ensure that all the machines go towards that number. Now, something like this has been done in our small pumps business, and all the lines have been, we look at what we call unit flow, where there's very little inventory between stations or between machines. And that is what now we are trying to do, to ensure that, look at each and every line in Kirloskar and ensure that all the machines have a balanced capacity at the highest number. And that doesn't necessarily involve, it might in some cases involve getting a machine, but in other cases it might be, ensuring that some operations from one machine are moved to the other, or things like that, or ensuring that each machine is operational all the time. Sometimes you may need to keep some machines on another shift. As we've told you earlier, we work in 2 shifts, but sometimes now we may need to operate some machines on 3 shifts. So these are the activities which we believe will, in addition to buying new machines, as per the capex plan, will improve the situation. Also, like Rama has also mentioned that we have put up the mega store. Similarly, last year, as you're aware, we also put up the high pressure molding line for the small pumps business. So over a period of time, we are slowly but surely increasing the capability of our factories to produce in greater numbers, but at the same time looking at how much we put in capex year on year. I hope that answers your question.
Mr. Kothari, your question about KPML, essentially the last quarter we did see a lot more demand from our small pumps business. And as you know, KPML supplies our small pumps sector with all the motors. So that's one of the reasons why the production numbers and the dispatch numbers of KPML were enhanced in the last quarter, because those motors were essentially sold to KBL.
Thank you. Sunil, I'll request to come back for a follow-up question. I request to all the participants, please limit to 2 questions per participant and join the queue again for a follow-up question. Next question is from the line of Ranjit Shivram from Mahindra Manulife Mutual Fund. Please go ahead.
Hi, sir. Congrats on a great set of numbers.
Sorry, there's a lot of noise from your line.
Oh, okay.
We can't hear Mr. Sivaram.
Better now? Hello, is it better now?
Yeah.
Yeah.
Yeah. Hi, sir. Congrats on good set of numbers. So just wanted to understand, like, the standalone EBITDA margins have been very good. So is there any one-time impact on these margins?
No, there is no one-time impact because when we have one-time impact like we did, I think in the third quarter of last year, we had reported it. And there is no exceptional item this year. I think throughout the year there is no exception.
So, like, is this kind of the sustainable kind of a margins, or you believe that there are certain orders which had helped us to show this kind of margins?
This is, basically what we are saying is improved operational efficiency. The product mix improvement has also been there. And since you are one person who always asks me, there is no nuclear business from us in this year.
Okay. So because that's why in an understanding we wanted to know whether these kind of margins are a sustainable one, or whether it's kind of was there any specific order which we had executed? That's what I was trying to understand.
If you look at the company's performance historically, the highest sales and the margins are in the quarter four. So we expect that the company's performance will continue to improve, but you should look at what has been happening quarter on quarter for the last few years. So I don't think it will follow any different trend.
Okay, that's great to know. And sir, regarding this overseas business, what's the overall outlook that you foresee? Is there any headwind or any tailwind? So how should we read that?
Sivaram, I think the consolidated backlog is there with you along with the domestic backlog separately. So you can see the backlog position of the overseas business. Usually we usually assume between January and July for book and bill business, because business that we will book in the same year, and the business as you will see has gone up, the backlog position, order book backlog position. So I think that from visibility side it will give you a picture of where the business is headed. Do you have any other specific questions? I mean, there's always changes, as with the number of wars going on right now. There are always a variety of changes happening in the market, but at least there is some visibility which is positive.
So in the overseas, we hear that there is a lot more investment that can happen in the oil and gas space. So are you also upbeat on that prospect, or you don't see any major change in that?
I think, Mr. Sivaram, I've mentioned to you before also, I think when we spoke the first time, that in 2014, about 65% of our international business came from oil and gas. Last year, new products in oil and gas contributed, I think, under 7 or 8%. So, we've made an effort, towards being and targeting green applications, non-oil and gas applications. And at the same time, as you appreciate, because you'd be tracking many companies in the petrochemical space, petrochemical margins tend to be higher. And so, given that we were, growing the other businesses, we've also looked to see how to bring margins to the same level in the other businesses, which slowly is coming to fruition. But that said, we haven't exited the petrochemical sector. We are still strong there. We are known there. Our brand is strong there. And as you would be aware, there are many floating LNG projects as well as LNG projects going on. And we continue to get a good fair share of the inquiries, and we are still booking a good number of orders in that sector, going forward.
Thank you, Ranjit. Kindly come back in the question queue for a follow-up question. Requesting all participants to restrict to 2 questions per participant and come back for a follow-up. Next question is from the line of Manish Goyal from Thinkwise Wealth Managers. Please go ahead.
Yeah, thank you so much, and very hearty congratulations on strong performance. Really appreciable. Sir, couple of questions. One on the, like, continuing on the previous questions on the margins front. So, maybe if you can give us a perspective that we were implementing APOEM model, and so how has been the adoption of that with the dealers, and how is it also helping us on the margins improvement, balance sheet improvement, and where does this get reflected in terms of our stock to order, make to order? How has it been helping changing in the breakup what we give in our revenue? That was the first question. And on the second question, Mr. Sanjay Kirloskar did mention that international sales will look better in FY25. So, but FY24 was quite weak in terms of growth rate. It has grown 6% for the full year, and for the Q4, the sales were down 18%. So is it that some of the large orders which were getting delayed are still not delivered? What is the quantum of such orders? And even the order inflow has been weak. So maybe if you can give us perspective on international business. So these are the 2 questions. And then I have follow-up in terms of what is the exports of from India, direct exports from India, and how is it growing? And what is the services and aftermarket revenue component in standalone and consolidated business? And how are digital initiatives helping this our aftermarket and services business to grow? Thank you so much.
Mr. Goyal, thank you for your question. I'll answer the first one, which you asked about APOEM model. I think we've been discussing it, and our first APOEM was put up in 2011. But it's been a journey for us to move forward and get not just the market but also the company in line with what we were envisioning when we put up the APOEM concept. I'll just mention it because there'll be other people on the call. I know we've had other calls before, so you'll probably be a little bit aware of the concept. But the APOEM concept is where we sell the bare pumps, industrial pumps, to our APOEMs, who are the large dealers. They made investments in terms of doing some trimming of impellers, so a little bit of customization as well as testing, which is very important because now they can test these. After doing the customizations, they can test the pumps locally. We have APOEMs in the north, east, west, and south. And so this.
Sorry to interrupt you, sir. We are losing your audio.
Alok, you are not clear.
Okay, can you hear me? Is it clearer?
No,
Manish, sorry, but then your audio is not coming clear at all. I'll request to join the queue again.
No. So can you better? It's not clear.
Sorry?
Can you hear now, or it's still unclear from my side?
Sir, it's still unclear.
Okay, just give me 1 second. I will see why they can't hear. Why they can't hear? Give me 1 moment.
Ladies and gentlemen, please stay connected.
Just hold on for 1 minute.
Yes, sir. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnecting. Manish, you can proceed with your question.
I could hear Manish's question. I'll just answer his question.
Sure.
Yeah, thank you.
So he asked about APOEM. So before getting into the answer, I just thought for the sake of the other participants, I'd mention what the APOEM concept was. I mentioned that we put up the first APOEM in 2011, and it was a little slower in terms of the pickup as that we were expecting, because the concept of an APOEM was that we would sell him an industrial pump. So this is mainly for industrial pumps, or only for industrial pumps. The APOEM would trim the impeller and do the customization, and then he would test it, because he also invested in a testing facility. And we have 5 APOEMs in India: North, South, East, and West, and South zones.
Can you hear us? Hello?
Alok, you are not me. Hello? Alok, we lost you again.
Sir, we are not able to hear you. Participants, please stay connected while we check the connection for the management. Participants, thank you for your patience. We have the line for the management reconnected. So you may go ahead.
Okay. And just interrupt me if you can't hear me anymore. I think Manish asked the question about APOEM, which I was trying to answer. But before answering it, I think I need to give the background of an APOEM so people are clear what an APOEM means. So, we started with this concept in 2011. The APOEM the idea was that we could supply an APOEM in industrial pump, because this is mainly for industrial pumps. The APOEM could trim the impeller, he could add the motor or engine, and he could test it. So the APOEM also made investments in testing of our equipment. And after that, he could dispatch it. The idea was that he would hold a lot of these pumps in stock, thousands of these pumps in stock, and the delivery period would be, for us, what is maybe 16 to 20 weeks would probably be for him, right down to a week, sometimes less than a week, up to a maximum of 2 weeks. And this was the overall concept. The effect of this is that, a lot of the traded items, like the motor, the base plate, the coupling, that are normally fitted on the pump and supplied by us, and which are normally bought out for us and usually sit in inventory for us, would basically be done by the APOEM. So that would reduce the amount of WIP on our books, reduce the inventory in our books, and the APOEM would hold that, and he would sell the pump. The other side was that the APOEM would pay us upfront for the pumps as soon as they were dispatched. So it was converted to a cash and carry business on the industrial side. So this is the overall concept. The upside was that we get our pumps in the field. Our pumps are stocked in large volumes. They come in large bulk orders to our plant. So what was a made-to-order product becomes a made-to-stock product. And so there's better balancing in the plant for this kind of industrial business. Cash comes up front. So these were the positives. The downside was that, of course, traded items go away. So the revenue number starts coming down because all the traded item goes away. But of course, the upside of traded items going away is that material cost also goes down because you can't make the same amount of margin on traded items as you do on your own product. So that is the concept. We now have 5 AP OEMs. They're doing very well. The market has picked up, and on the inside of the organization also, we have understood. Our people have understood that just pushing the top line is not important. Obviously, we want cash flow, we want profitability, we want better material costs, and lower inventory. And now that both inside and outside we are both aligned, we see that over the last 2 years, 3 years, the numbers have gone up very fast. And given that it's also in a way in line with a lot of industrial investment, and we are able to deliver at a very short notice from the AP OEMs, these together have seen to give us a very good rise in the AP OEM. So that is the big positive of AP OEM, and it's also allowed, like I said earlier, a lot of the MTO type of business, so made-to-order type of business, to become converted into a made-to-stock business, which is very important from a plant management point of view. So these are the few points. Does that answer your question, Manish?
Look, I just wanted to get a sense that how does it reflect in terms of contribution for AP OEMs, and where does it get reflected, and where does it get manufactured?
It gets manufactured in the Kirloskar plant. It gets reflected in made to stock, and of course part of it is in made to order, but a lot of it is in made to stock. And what's the third question you asked me?
So sorry to interrupt you. We'll ask Manish to come back for a follow-up question. We'll move to the next participant.
And the other thing I think is reflected in margins through lower MSR ratios, lower material cost. And I think the next question is ask you about.
Thank you. The next question is from the line of Varun Bang from Bandhan Life Insurance. Please go ahead.
Yeah, hi. Thanks for the opportunity, and thanks for the detailed presentation as always. Just 2-3 questions. Firstly, how should we look at our journey in diversifying our product portfolio in the international market? And simultaneously, we would also need to develop the after-sales network in the newer markets that we enter. So how should we look at our journey here? And should we be looking at acquisitions to get access to the network as well as customers? So with focus on UK and US market, if you can share some details here.
So we are 2 different questions really for us, because when we entered the US market, is a good way to talk about it. When we entered the US market, obviously as you'd expect, we were not a known brand. The US has pump manufacturers who have been around for 80, 90, 100 years. And they have, like we have in India, an established dealer network with dealers who've been with them for 2 or 3 generations. And so puncturing into that market was very difficult. It's one of the reasons why we decided to go with fire pumps. And fire pumps in the US market was useful because fire pumps, number one, have almost no spare requirement. They have no real requirement for service. And why I say spares is because a lot of the dealers of other products did not want to shift to us because they have a concern that they would lose the historic spares of the current principle they had. And so we had a little bit more traction on fire pumps. And we started with various dealers who we were able to move over on fire pumps and get penetration in fire pumps. And that's how we started entering the market. And that's how we enter most markets. We enter them looking at one niche area. And once we get strong in that niche, we widen a little bit. And we add a little bit more. So like in the US market, the next step was adding water and pumps for water supply. And so these are the pumps added through our company, SyncroFlow. So establishing that route to market really is extremely important. In the case of SyncroFlow, that was an acquisition that we did. It was done at a very, very low price. But the real objective of that acquisition was to get route to market. So to answer your point, yes, we do look at sometimes acquisition, but mainly to look at route to market because we already have a lot of the products between FPP and KDL. And so there's not any real need to buy a company for products. But we do need to sometimes look at ways to get into markets. In the international market, we are very niche in different countries. We don't cater to the entire basket that we have. In America, mainly it's water and fire. In the UK, it's water, fire, oil and gas, and chemicals. The other business that we've really added in is services. And I think I mentioned that earlier that, oil and gas was at one time 65% of our revenue, and now it's, under 7 or 8%. And that's because we've moved into services as a business. Today we have over 110 framework contracts with companies, and framework contracts are only contracts we consider framework if they're for 3 years or 5 years. And here we manage all the pumps on Petronas platforms or Shell platforms or BP platforms, different kinds of platforms where we've been given the framework, as well as chemicals like Ineos in the UK and large water companies. So most of the water companies in the UK we have an exclusive framework with, except Thames Water, which is non-exclusive. So over time, that's also become a very large share of our business because we're doing this across the world. And through services also, we are able to now install our products by replacing a lot of the competitors' products, because the service contracts are not just for our pumps, they're for all pumps at that site. Does that answer your question? I know that your question had a lot of factors to it, but I tried to see if it's possible to summarize it.
No, that's right. That's a very good explanation. Just one more thing on the framework contract. How should we think about the margin profile of the framework contract, and how do we price it, and what is the cost to service these contracts? And do we have lower margins initially and then subsequently they move up? If you can just share some perspective on that.
So on average, our framework contracts tend to be about 2 times the gross margins of our product business for the international business. And they don't start off low and go high. We usually take over the site, and our objective is to look at repair, refurbishment, and now recently we've added upgradation. So usually we go in and look at an old pump, and we look to upgrade the efficiency of that old pump. So if it was operating, I'm just throwing a number at you, 70%, we'll look to make it 75, 80, and then we'll work out a new agreement of what that additional efficiency enhancement should mean to the customer and to us as an additional payment. So I would say that, we have a base contract, and that's based on the customer saying that, we have so many pumps, we make a plan of all those pumps, and we say that in year 1, year 2, and year 3, we will make changes to these pumps, so that way we have predictability, and he has predictability for his budgeting requirements. And so there's a fixed amount. So because the objective for us was really that we need to be able to predict, and we need to have visibility on revenues out of services. And obviously, if we know the revenues, we have a general idea about the margins. So that is really how they operate. Does that answer your question, or have I missed out something?
No, I think that answers my question. And just one last question on innovation. If you can share some insights on how we manage innovation, how large is our team, and where do we source technology from? So basically, where do we get feeds for innovation? And as well as on the digital initiatives, if we can share, how are we able to imbibe these changes? That would understand. Yeah.
Plans for innovation. In fact, we have a group called iMission where we come out with new ideas, and we get quite a few patents all the time. And this is based on, whether it's just on the product side or whether it is the digital side. I think for the last few years, we've been talking about our Kirloskar device, which is an IoT device. We've talked about augmented reality, virtual reality. We've talked about AI. We've talked about 3D printing. So as a company, as an Indian MNC, we can only stay in business outside the country if we are on par with global MNCs, the large competitors that we have based in Europe and America. We launch more than 100 products every year, just in our small pumps business. We've launched a new, I think in the last time we said we've launched our DBXE model, which is the only pump in the world, I would say. Are you there?
Hello.
Hello?
Yes, sir, you're audible. Go ahead.
Yeah. We've launched, last time I think we mentioned that we've launched the DBXE model of industrial pump. And now also for building and construction, a new range of inline pump. Our end section pump actually are the only ones in the world that meet the European MEI norm of 0.7, the index meeting efficiency with an index of 0.7. In fact, I heard that one of our European competitors is now going to upgrade his series to be able to match our pumps. So, innovation is the only way we can stay in the same space as our global competitors. And therefore, you can rest assured that we will continue to do this, launch many new products every year, and also ensure that we are not found lacking in on the digital side. Mr. Manish Goyal had one question, I believe, why the Q4 revenues internationally came down. I think on that, in our presentation, we have mentioned that on slide 7, basically to say that there were two orders or two places where the sales did not go as we had expected. I think some engines are to come for some UK two large projects of Tilinga, and about 7 projects. Engines are to come for about 7 projects which were expected to go out. And in Thailand, I think large CVP order, or concrete volute pump order, I think two sessions ago, not the last investor call, but the call before, we said that we had received an order for concrete volute pumps for flood control. And we were the only one in the world to get a repeat order for the city of Bangkok. Those pumps were delivered, but we were waiting to get a confirmed irrevocable letter of credit from the end customer. So about 150 million Thai baht we held back from dispatching. That has now happened in April, because it took until early April to get the commercial terms exactly as we wanted. And therefore, in early April, we made that statement. So I think with those two items, there is a growth over the quarter, but now it will get reflected, and it would have been reflected in the last quarter, but now it will get reflected in the first quarter.
Thank you very much. Varun, I'll request you to come back for a follow-up question. Next question is from the line of Akshay from Axis Securities. Please go ahead.
Hi.
Hi.
Good afternoon, sir. Sir, my first question is on the raw material prices. We have seen that so in the last quarter, it was softened. So how do we see that in FY25? And so have we increased our prices as well?
Can you please repeat what you said about raw material prices?
Yeah. So how are the raw material price trend in the first quarter?
No, the raw material price trend for us is the same as anyone else who is buying pig iron, copper, etc. It's quite stable throughout the quarter, from what I understand.
Okay. So, and also, are we increasing sizes on our residential pumps or the industrial pumps end?
We haven't had price rises.
Okay, we aren't taking any yet.
As in, I mean,
FY24, have we?
There's a product mix improvement.
Okay.
There was no price rise also last year.
For residential pumps.
Okay, no size hike.
No.
Okay, sir. I'll get back in the queue.
Thank you. Participants, please restrict to 2 questions per participant. Next question is from the line of Ishita Lodha from Swan Investments. Please go ahead.
Hello, am I audible?
Yes, you are.
My question is, what has been the capacity utilization for TKSL in FY24, and what is the break-even capacity? what is the revenue potential that you can get from TKSL? And when this is achieved, what could be the margin potential? And what are the factors that can drive this profitability? Is this just a capacity utilization increase, or better pricing terms can also help you increase? Thank you.
We try to keep our capacity utilization at around 70%, looking at the forecasted demand. So that there's always, if there's any extra demand, we can always meet that. And this is done through either running in. Could you repeat your question? I think I went on the wrong track.
This is for TKSL, Kolhapur Steel.
Ishita, can you hear us?
Yeah, I can hear you now. I lost you in between.
Is this for the Kolhapur Steel that you're asking questions?
Yeah, Kolhapur Steel, correct.
Okay.
So Kirloskar Steel also has been operating, it depends on the kind of castings that we make and the metallurgy of the casting. And there also, I think it was about 200 tons per month is the capacity, maximum achievable capacity.
But that is done with all stainless steel or from stainless steel. It's profitable.
Mm-hmm.
I hope that answers your question.
Ishita? Ishita, can you hear us?
Yes, I can hear you.
Yeah. Have your questions been answered?
Yes, thank you.
Thank you. Next question is from the line of Saurabh from Saraswat Capital. Please go ahead.
Good afternoon, everyone. I wanted to understand about the solar pumps opportunity for Kirloskar, because I understand that you are not directly dealing with the state governments. You are selling it to the system integrators. But how big is the opportunity for you?
The opportunity for us is large because the government's program is large. But like I said, we said that earlier also. We follow our own commercial terms, and we ensure that we are paid for our equipment before it leaves the factory. So obviously, we will not get all the orders with that kind of commercial terms, but we protect the company by taking orders on those terms. And I would say that we deliver many tens of thousands of pumps for solar every year.
Okay. So it's only because of the payment terms is that we don't directly participate, or is there are there any other reasons that?
It's the payment terms. I don't really want to get into that, but we've had experiences with state governments earlier, and based on that, we just have, that we will not do business.
Okay, so thank you.
Yeah, if you look at our competitor who is in this business, his debtors are 178 days, and you compare that with us. I think our business models are different, and those business models probably suit him, and this business model suits us.
So we won't be much aggressive towards solar pumps. It only goes to what our system integrator channels support.
No, we work through the integrators, yeah, and we work with the commercial terms like I mentioned.
Okay.
And we have a large network of integrators in every state.
Okay, sir. Thank you, sir.
Thank you. Next question is from the line of Ashwani Sharma from MK Global. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a great set of numbers. Two questions from my side. First is the bookkeeping questions. Do we have any breakup in terms of standard pumps and make-to-order pumps?
I think we break up. It's about 50-50, I think.
Okay.
It's there in the presentation. It's there in the presentation. I'll just tell you which slide it is on.
I'll take it from the presentation.
Slide 14.
Okay. And what was the contribution of services in the revenue in FY24?
Could you repeat that question?
What was the contribution of services in the FY24 revenue?
We don't disclose the sector-wise performance.
Okay. This services contribution I was talking about, services, products and services. What was the services contribution?
We don't disclose that.
Okay. The second question is on the new opportunities, especially from green hydrogen and then NPCIL, the small and modular reactors which they're talking about. Do we have product portfolio, to explore opportunities in these new areas?
Yeah, we do have product portfolio for the new areas. In fact, I think last time also I had mentioned that we've developed boiler feed pumps for the 700 megawatt. We're in the process of developing the primary heat transport pump, as well as other primary circuit pumps are being developed. The small modular reactor, I think, if you look at what's happening around the globe, I think only Westinghouse has a working model and still under approval. There are orders for that from GBN, which is Great Britain Nuclear, which I don't think will be delivered in the next 7 or 8 years. As far as our country is concerned, the only other modular reactors are the military version with everyone who has a nuclear submarine, who makes their own nuclear submarine. So that's basically US, China, Russia. They have their own nuclear submarines, so they have developed certain types of pumps for the nuclear submarine. As far as we are concerned, we believe that we can develop such pumps if they are required, and as and when they are required. For the small modular reactors on the what are called land-based reactors, but the design will have to be approved first. As far as green hydrogen,
on green hydrogen, we have already have orders from HIDC complex in New York City, which is one of the biggest areas where green hydrogen is going to be produced as per the kingdom. So that's an area that we're already working on. We already work with Shell in this particular case with Shell. Rodelta is a partner with them, and they are the strategic supplier for a lot of their projects, both biodiesel as well as green hydrogen. So there are quite a few opportunities. We have the product range, and that's an area that we are promoting with the key process owners, people like Air Products and many others as well.
Thank you. We move to the next participant. Next question is from the line of Anish Shabalia from Girik Capital. Please go ahead.
Yeah, hi, good evening, sir. Congratulations for a great set of performance in this quarter. And we have come a long way in terms of, the margin improvement which we were talking about earlier. Sir, so my question is that, so in this year, we have seen this margin improvement because of product mix change as well as operating efficiencies. And our margins have, reached in line with our peers also. So my question is, in the next year, do you see further scope for this continuing and lead to more margin improvement? That would be great.
My belief is if commodity prices stay, stable, and with the orders that are coming in, we believe that we will be able to maintain these kind of margins and hopefully improve on them.
Okay. And so my second question is, you also alluded to growing in the double digits in the standalone business. And also, the the order book in the international is also higher in double digits versus the last year. So my question is, in this year we grew at close to 7% in the consolidated revenues. What will lead to double-digit revenue growth in the next year, despite the fact that the order book is up by only around 4% at the consolidated level? So would be great to know, if something did not work out well in this year, but that will get changed in the FY25.
One, we are very happy to see the inquiry level. Our hit ratio is better than before. And the fact remains that some of the bottlenecks in the plant, I think they've been taken care of by the mega stores as far as incoming logistics is concerned. And as far as the small pump business is concerned, there's no visibility for you in the order booking because as made to stock, we deliver exactly everything in the same month. So we are quite happy to see the way things are moving ahead, and I'm sure we will be able to meet your expectations.
Perfect, sir. And sir, last question is just bookkeeping. Sir, other income in this quarter was higher than last 3 quarters average of around 7 to 8 crores, and in this quarter we did around 36 crores. So if you could help to understand what lead to that increase.
So in terms of other income, we have some income from our investment, current investment, and also there is a forex gain which was not there in the last year. So we have a forex gain from our international entities and the investment income. These are the 2 contributors.
Okay, all the very best for the next year. Thank you.
Thank you.
Thank you. Next question is from the line of Harshil from Renaissance Investment Managers. Please go ahead.
Hi, sir. So how do you see the demand environment as of today, looking that the elections are going on?
Is that a short-term or a long-term question?
In the near term, say 6 months, 8 months.
How do I see the demand? Well, quite a large portion of our customers have already factored in what is going to happen. So